Hi, this is James Shrug with Westpac London's end of day report for Thursday, October the 20th. Well, the morning session in Europe was dominated by reports that actually came out during the US session last night that Germany and France are once again at loggerheads. They've reached an impasse in terms of what to do with the European Financial Stability Facility, how to leverage it, and when the Stability Fund should step in, at what stage of the process when banks, for example, need to be recapitalised. France, of course, wanting the fund to step in before the nation has to, whereas Germany saying that the nation has to step in and only using the fund as an absolute last resort. France, of course, wants to protect its AAA rating, which is at some risk at the moment. That's meant that European markets opened quite a bit weaker, but then it was just a case of jumping at shadows, and any report coming out about about the EU leaders summit this weekend generated quite a surprise reaction. At one stage we had a story come out that the EFSF would be able to buy bonds in the secondary markets. This was not news. This was known back in July, yet we saw a 1.5% rally in French and German stock markets on that. The Aussie dollar rose 1 cent on that story on the basis that risk appetite was returning, yet it was a total non-story. The gains in markets in the Aussie certainly didn't last, but nevertheless it just shows how jittery markets are at the moment about the European situation. Other headlines that came out today, mostly not helpful. Germany doesn't rule out postponing the summit this weekend if some sort of agreement, it looks like, not being reached. And the IMF has said it might withhold its share of Greek bailout funds. This is the 6th tranche of the 2010 bailout package for Greece. The IMF might withhold its share of that if agreement isn't reached and firm progress isn't made this Sunday. So the pressure really is still on October 23rd, if indeed it goes ahead, depending on who you listen to. Other news today out of Europe, the German economy minister has revised down the growth forecast for Germany for next year from 1.8% to just 1%. But he did say, I love this, he ordered there can be no talk of recession risk. So there. Our view at Westpac is that we probably will see a mild recession in Europe and a deeper one, of course, across Euroland. Other UK retail sales were quite strong in September, a bit of a bounce there after they fell in August. Could be a bit of a riot impact there. A lot of stores were shut down, shut early or couldn't open for a few days right across Britain because of the civil disturbances we saw back then. Then we moved on to the US. In terms of economic data today, we've had a decent rise in the Philadelphia Fed factory survey. It rose from -18 to +9, and some of the detail on shipments and orders was very solid, although the jobs component was a bit softer. Existing home sales in the US fell 3% in September, and in fact, in the quarter, compared to 2 years ago, home sales are down 7.6%. So further evidence that even though the US economy has been recovering for 2 years, the housing market's been going backwards within that story. Philip Morris, better than expected results. eBay missed analysts' expectations. US jobless claims, a measure of the extent to which people are being laid off each week, fell 6,000 to 403,000, hovering around that 400,000 level or just above that it has been for a while. And Gaddafi was found in a hole and is now dead. Given all that, right, commodities first. We've got oil down 1/3% at $85.82 a barrel. Sugar's down 0.5% today. Gold's down 1.3% at $1,625 an ounce, and copper prices are down 3.6%. On to equity markets, and I'm talking at about 4 o'clock, so there's still an hour to go in European trading. But at the moment we're looking at the London market down 0.8%, French market's down 1.4%, and the German market is down 1.9%. The Dow in the US is up 0.25%. It's at the level there is 11,533. The Nasdaq is down 0.2%. I think that's probably an eBay effect. The Aussie dollar had quite a ride today. The range of 1.016 to 1.03, or about 1.5 cent range, is currently trading around the middle of that at 1.022 against the US dollar. I'll see you again tomorrow.